Hello, everybody. My name's Simon Cox. I'm a journalist at The Economist magazine, and welcome to this panel on financing the blue economy. Can blue be the new green? Well, if you try to size up the blue economy, you can come up with some fairly big numbers. 2.5% of global GDP is one commonly cited metric. But in fact, as we know, most of the value of our oceans is in fact unpriced. That being so, how can we drum up the investment we'll need to make the blue economy work and to make it sustainable? We've seen a rush of enthusiasm for green finance recently. I think it's fair to say there's been more hesitation about blue finance. So what can we do to turn some of that green finance blue? To discuss that question, I've got three excellent panelists. Let me introduce them to you briefly now. We have Rana Karachi, who is Regional Industry Director at the International Finance Corporation. Paul Buchwitz, who is Senior Portfolio Manager for Equity at DWS Group. And we have Benoit Bosquet, who is Regional Director for Sustainable Development in the East Asia and Pacific region of the World Bank. Welcome to all three of you. Benoit, if I could start with you, from the World Bank's position, what is the role of an institution like the World Bank in this area of the blue economy? And in particular, I know the bank was instrumental in launching the first sovereign blue bond with the Seychelles a couple of years ago, I guess 2018. Could you talk a little bit more about that experience?
Very good. Thanks, Simon, and hello, everybody. So we at the World Bank in the blue economy space work obviously with government, but we try to assist them in putting in place enabling frameworks for private investment to come in and effectively channel private investment to sustainable activities, right? And the Seychelles blue bond, in a way, is a good example. So the Seychelles government approached the bank with a request to help the country tap the capital markets, and they really wanted, to initiate a blue bond in particular. And so we built on our experience with issuing green bonds, and this became the first sovereign blue bond. It's actually still the only one to date. Thanks to an IBRD partial guarantee and a GEF concessional loan, three impact investors, Calvert Impact Capital, Nuveen, and Prudential, subscribed to that bond. And the proceeds, it's about $15 million US, so fairly small, but it's a small country as well, are channeled to a grants fund, and then as well an investment fund. And so the goal is to develop the blue economy, support research, fish processing, small tourism activities in a way that fits the Seychelles strategy to manage its very large ocean space.
And why was it necessary for the World Bank to offer those guarantees and also a loan? I mean, it feels a little bit elaborate or even circular for you to have to lend to the country in order for it to borrow from investors. What was the logic behind that?
Well, the Seychelles wasn't exactly a hot spot for capital markets, at least at the time, and the blue economy was a new space. Green bonds were fairly well known, but blue bonds not. And so it was important to, de-risk the investment framework for investors and also reduce the cost, the coupon cost to the investors. And so this financial package made it possible to happen.
And you mentioned it's still the only sovereign bond. Why has the sort of take-up been slow? Why hasn't there been a sort of rush to follow the Seychelles example?
Well, first of all, it was a new model, but then, of course, COVID hit. And so governments have had plenty on their minds, clearly. But as we slowly come out of COVID, we see the interest growing again. And that is very good news. We're receiving new requests. And as you may know, Fiji has announced a plan to issue a blue bond, for example. But quite clearly, other countries, as well as the private sector, will wish to follow suit.
Rana, can I turn to you? And what's reasonable to expect of the private sector? I mean, as I'm sure our audience knows, the IFC is the arm of the World Bank that works with the private sector. What is it reasonable to expect from them in this blue economy space? Given that, as I mentioned in my opening remarks, a lot of the things we value in the ocean actually aren't priced.
Well, so thank you, Simon. And I think, correct. I mean, I think the way we work is we partner very closely with our colleagues at the bank while they're working with governments, where we come in to help stimulate the private sector. And I really firmly believe, the blue economy and working on oceans, I think it's going to be critical and something that's going to be important for the private sector. But maybe if I could just share just a couple of data points just to articulate why it should be and why it should matter for the private sector. So, if you think about it, and you touched on this very nicely in the opening, right? Oceans provide jobs, right? They provide jobs, food, nutrition, they power economies, they keep the planet cool, and their biodiversity, right, enriches science and innovation. And the private sector is weaved throughout all of those different segments. I think when we looked recently, the OECD estimates that the ocean economy, it already contributes about 1.5 trillion annually to the global economy, and expected to double to 3 trillion by 2030, right? So all of that, part and parcel of the private sector is very much part of that. Marine fisheries, right? Fish processing, marine aquaculture. 60 million people work in the seafood sector just in Asia alone, right? Then you go to ocean shipping. 90% of traded goods globally are transported by ship, right? So this sector includes ports, terminals, and logistics. Again, private sector is very much prevalent there. Offshore wind power, right? This is a huge untapped renewable energy potential for meeting the climate agenda. Most of the work so far has been done in Nordic countries, but we also see this now starting to pick up in Asia. Again, role for the private sector. And of course, tourism and marine biotechnology and aquaculture. So this is all areas where the private sector is very much involved. And so we can't address this, without engaging them. The issue now that we're all facing, right, and why we're having this discussion, is that our oceans are at risk. And it cannot be done by just governments. It cannot be done just by policies. You really need to bring all parties together, including the private sector, right? 8 million tons of plastic debris is entering the oceans. 1/3 of the fish is overstocked. Rising middle class, you're going to see an increasing consumption of plastics. So I think, there's a lot of economic opportunity to be had, but there's also a huge role for the private sector to play. This is a new and emerging asset class, right? We will about the blue economy, about blue loans and blue bonds, but it's an important one. As Benoit said earlier, green was still new, and now green is well established. So blue is new, but we think, given the size and the scale of the economic impact and where the range of sectors of the private sector is involved, we really think there's a lot of opportunities for the sector to contribute and to grow.
Paul, welcome. Blue is new. You've just, I understand it, launched a blue equity fund focused on environmental aspects of the blue economy. Can you tell us a little bit more about what goes into launching a fund like that? And if it doesn't sound rude, why has it taken the financial industry so long to launch equity funds of this kind?
Yeah, thank you very much, Simon. So it is why it takes so long. This topic wasn't really on the agenda, I guess, of the public, also of the governments, and I think the awareness of the problem, the degradation of the health of the ocean, wasn't really there. That changed quickly a couple of years ago when this topic like plastic pollution popped up really and caught all the media worldwide. And then we saw an increasing momentum. Also, it was caught by the regulator. We have seen stricter regulation here in Europe. And also the public reacted to that. And we saw a lot of increase and demand from the public for such a product that is kind of contributing to a transformation of the blue economy towards a sustainable blue economy. And that is what we try to do. That is one goal of the fund, to support the transformation of the blue economy to a sustainable one by engaging with the companies that have harmful practices, high-risk practices that are impacting the health of the ocean negatively. One problem still that we face is that the data quality is still quite low. So usually we using third-party independent data provider that supports us here with the evaluation of a sustainability of a company. So looking at environment, social and governance aspect. So, but even the incumbent ones, really the big ones, they do not have really good specific ocean related data. So you have to gather those data by yourself. And the companies are not always very transparent about that. So we need to send out questionnaires and ask questions like, okay, what percentage of fishes of your aquaculture farm getting antibiotics? What is the content in terms of your fish feed? Do you use fish oil, fish meal, or are you already replacing it with more sustainable solutions? You have to ask that. It is a long process and it's costly, and you need expert. So what we have done is, because those data are not available in the market, we partnered with World Wildlife Fund for Germany, and they help us to kind of set the right targets for the companies, set the right key performance indicator, help us to evaluate those companies when it comes to sustainability in terms of the oceans.
So that's interesting. Can you talk a little bit more about that engagement? I mean, it does seem to me that a firm would have very little interest, to be honest, in measuring some of these things. Do you as an investor have more clout to persuade them to be more forthcoming about these externalities?
So first of all, the bigger the fund becomes, the larger our holding in a specific company, the greater or the bigger is our power itself. So we can vote. We use our proxy voting at shareholder meetings. We can speak out at annual general meetings. We can also vote against kind of the discharge of the board of directors, for example. So we have some sanctions that we can use. We can also entice them in that way that we say, okay, if you are moving with us, or if you transfer to a more sustainable practices, for example, then we might increase also our holdings in your company. That is, and we can become an anchor investor for you, which is also liked by management. And it's also that we believe, and that is also what we're trying to tell the companies, that if they not act timely, there are risks that they end up as stranded asset, because sooner or later, probably a regulator will kind of will forbid like practices that are harmful to the ocean, like bottom trawling or any other practices, so that you have a risk of losing your business. And it's better for you to change first than last. And yeah, so far, I guess we have a lot of arguments to drive the companies in the right direction.
Well, that gets us into this issue of what counts as blue. And I suppose if you're engaging with companies that at the moment might not be all that clean, might be damaging the environment in some ways, you can see how there's a risk there that you'll be investing in companies that aren't all that clean now, but might improve. How do we classify what counts as blue and what's investing in actually quite a sort of dirty industry? Perhaps, Rana, if I could direct that question to you. I believe the IFC has been working on some principles in that regard.
Yeah, and maybe I can just make a comment to build on what Paul just said, right? So, what we're finding, especially out of COP26, is people are much more informed about, the environment, about potential damages. A lot of corporations have, made statements in terms of targets, sustainability targets, and regulators are becoming more aware. So I think there's a large movement in there, and that will come. Consumers, the general population are much more informed and much more aware, and they can get data much more readily. So I think part of, if I could add on to Paul's message, is that it's better to be proactive than reactive, given the importance of the ocean and the blue economy. But then just going into how do we develop, right? How do we assess, and how does something qualify for a blue loan? As I mentioned, it is a growing space. It's relatively new. We, on the back of the World Bank's work, we then have been able to work with some private companies to be able to issue. So, for example, IFC just issued its first blue loan. It's with Indorama Ventures, that's based in Thailand, and they have committed to recycling 50 billion tons of plastic by 2030, if I remember correctly, by 2030. And so as a result, we brought in Asian Development Bank and DEG to come in with us, and that was the first blue loan. So what we had to do was build and how do we categorize it? How do we identify the assets? So it's a subset of green loans, and it has to have activity that's essentially targeting to help sort of the ocean economy. So a couple of things. So one, you have to ask, is it consistent with the green bond principles as a first step? Yes, okay. Then does the blue project itself contribute to SDG 6 and 14, which is clean water and sanitation, or life below water, right? So you have to be able to assess that and quantify that. And then you have to answer, does the project adversely impact progress on other SDGs, for example, climate action, responsible production and consumption, to make sure you address that. And then are ESG safeguards, such as IFC's performance standards, applied, right? If there's any material ENS risk. Now, obviously, because that loan was an IFC loan, we had to make sure that it complied with IFC's performance standards. So in doing so, we helped set out the sort of a blue framework for this company against which we issued a blue loan. Now what we are doing for our financial institutions group and partnering as, the chair of the sustainability council within ICMA, helping to lay out a blue bond taxonomy and framework that can then be used for future issuances of bonds. So the IVL was a blue loan, and now we are helping on the back of that build a framework and taxonomy for blue bonds. And so we're talking with some financial institutions as well to do that. So that is in the works, and that's something that we hope we'll be able to officially launch shortly soon.
And Paul, just to come back to you in a minute, you're obviously in the equity space. Are there any guidelines that you can follow that multilateral organizations may have provided that help you to define what counts as blue and help you and your competitors sort of operate on a sort of level playing field?
So yes, there are, for example, the Sustainable Blue Economy Finance Principles, and the World Wildlife Fund was also part of developing those kind of principles. And then you have guidelines for each of those industry subsectors, like for the shipping sector, like for the aquaculture sector. And that is what we use kind of as an orientation. And as I said, therefore, we have WWF on board, and because they are really the expert in evaluating all this. And this is how we use it, because, I mean, there is, in the financial industry, this knowledge is not that widely spread yet.
And Benoit, I guess we're really talking about the potential for blue washing and how that can be combated. Is that a phenomenon you're concerned about?
Well, yes. I mean, generally, greenwashing and blue washing needs to be avoided, and so it's very important that the types of partners we have here in this panel work together. So it's fantastic that DSW has now partnered with WWF, which before that, as Paul mentioned, partnered with the EU and others to issue these blue financing principles. Now we have IFC, issuing, as Rana said, these blue bond principles. We several years ago had issued a first report with the UN, basically defining what should be the blue economy, right? The blue economy needs to produce a good job, growth, but of course it needs to decouple the development of these ocean economy sectors from environmental degradation. As Rana said, oceans are in peril, and it's not just plastics. Of course, plastic is an emblematic problem, but fisheries are overfished, right? Most fisheries are indeed depleted. Coasts are degraded. And this is millions, hundreds of millions of people who live on the coast, right? Our big cities typically have been built on the coast. So the socioeconomic cost of degradation is huge, and so we want to channel, of course, the public and the private capital to restoring, to doing the good things, so that the benefits are sustainable, for the population and of course for the planet. Let me, if I could, Simon, just build a little bit on what Paul said earlier. I think there is also a benefit to institutions like the World Bank Group to invest in good analytics, right, and produce the data that the private sector can then use. So we recently, just last year, with the IFC together, produced very interesting studies on the lost value in the plastics supply chain in countries like Vietnam, Thailand, the Philippines. $9 billion we've calculated is lost in investment opportunities simply because plastic packaging is not recycled. This is a huge untapped area, and instead of tapping that, we keep producing virgin plastic. So this is just one example, where the public and the private sectors can work together, open the field, right, and channel capital towards a real blue economy.
Paul, did you want to come in there?
Yeah, and I want to add, to even improve the situation here, we need, and to help the private sector to take a bigger part, we need more transparency, and we also need to ask the regulator that they put pressure on the companies to more disclose their externalities that they might have. I mean, we are really good at, in terms of CO2 emissions, for example, scope 1, scope 2, scope 3. But when it comes to ocean-specific externalities, it is very little, and there's really no pressure that someone can put on the company, except of engagement, for example. But it would help really if we have a better disclosure at that front, on the one hand side. On the other hand side, we need really to educate everyone, because I think a lot of people have not really made the linkage between what kind of positive impact the ocean has when it comes also to mitigate climate change. I mean, there's a lot of money is going into technology in like carbon capture directly from the air, which is very expensive. I don't know how scalable this is, but I guess the money is better spent in protecting the ocean, and so maintain the capability of the ocean to absorb carbon, like the phytoplankton, like the whales, like the seagrass. And then you have also additional benefits to that. So I guess the money is better spent, but many people don't realize that.
That's right. I didn't realize actually the role that whales play as a sort of carbon sink. I hadn't cottoned onto that, but apparently you mentioned that they capture quite a lot of carbon when they die. Rana, did you want to come in there?
Yeah, but maybe I'll start by saying I didn't know that either. So that's a very interesting piece of data point. And I can imagine a lot of companies, investors, probably don't know where to start, right? So I quoted the numbers early in terms of the size of the economy associated with the ocean and the range of sectors that it covers. And so it could very well be, a lot of them they may be well intended, but don't really know where to start, right? They don't, and investors, maybe they don't see where there's no pipeline of eligible projects. I mean, I'd be interested in hearing from Paul, how does that pipeline look, right? Is it challenging to build up? What does it look like? And in thinking about that, we realize, and in many ways, the World Bank goes in, right? Early when there is a sort of an economic imperative and very important issue, we come in jointly to try to, to see how we can address it from the policy side and engaging the private sector. So some of the other things I think is worth mentioning that what we are trying to do, Simon, is in addition to sort of helping to set up the guidelines, which is important. So to understand sort of what does that look like, right? What are the blue loan or blue bond sort of principles look like? And then helping to set standards. And the bank is looking on also providing very important data analytics. You have to understand, what does it look like? What are the numbers? You know, what are we assessing here? I think that baseline is critical. But the other things that we can do, and we've done, particularly as we start, like I said, entering into sort of newer areas, is we can work with companies to provide them technical assistance, so we can help them, guide them, you know, either develop their baseline analytics or think through how can they structure their investment, what could they do to look at to help, the ocean economy, help abate marine plastics and improve, address SDG, the relevant SDGs. The other thing we can do is bring in tools like blended finance, right? So deals that may not necessarily seem commercially viable or bankable, but yet we feel have a lot of potential, particularly on the, sort of climate-related front. We do have tools at our disposal where we can work with the bank to provide some kind of blended finance, some kind of risk sharing to help kind of push it over that line. And to encourage, companies and investors to invest in the blue economy. So there are ways that we are getting engaged that will help try and stimulate from a push factor to get more capital into the ocean economy.
Benoit, perhaps if I could ask you, where do you things stand with blended finance? As I understand it, it's blended finance has not been, or the blue economy has not been a particularly popular sector within blended finance. I know that the World Bank has had sort of waves of enthusiasm for blended finance. What's your assessment of the potential there?
Well, I think there is great potential, and linking it precisely to climate and carbon finance, I think, is particularly relevant. We're just coming out of COP26, where the Paris Agreement rulebook was basically solved. So now we have a lot more clarity, not full clarity yet on Article 6. And what you see is the carbon markets are picking up really, really quickly. So what does this mean for the blue economy? Well, as Paul and Rana mentioned, there's a lot of carbon in the ocean, right? And on the coast. And a healthy ocean is also a productive ocean, and that means lots of fish, lots of whales, lots of mangroves, lots of coral reefs. All of these contain a lot of carbon. So there's, for example, in Indonesia, a major movement to restore and conserve mangroves, huge reservoirs of carbon. Indonesia can do so, meet its NDC commitments, but also potentially, sell carbon credits if it decides to do so on the, voluntary or regulated markets. So you see the interaction and the potential then to blend, IBRD, IFC, DSW, carbon finance. This is very promising.
And you mentioned the hit that COVID inflicted on blue bonds in general. I wonder, in particular, the damage to tourism, because quite a lot of the sort of revenue potential in some of this blue finance stuff is ecotourism and sustainable coastal tourism. So how much of a setback has that been?
It's been huge. It's been huge. For the Pacific countries, but also for countries like Cambodia, Vietnam. I mean, tourism basically went down to almost zero international tourism, and only starting to recover, but there's a really long way to go. So if there is a possibility, and we believe there is, to then invest in more resilient, more sustainable tourism for the future, that is, of course, a great opportunity. We call it GRID in the World Bank Group: green, resilient, and inclusive development. But you can substitute, B for G, and you make it BRID: blue, resilient, and inclusive development. And that very much includes the tourism sector.
Yes, well, one thing we don't have a shortage of is acronyms, but great to add a new one. Paul, Rana asked about the pipeline of projects and how healthy that is. Let me ask a cruder question. Suppose I don't care about the ocean at all, I just want to make money. Are there any sort of attractive investment opportunities in blue finance that I should be keeping an eye out for?
I think so, definitely, and that's one reason why we launched the fund, because that is always a goal to generate a decent return for our investors. So there are opportunities, and I think they are attractive. One thing that was also mentioned by Rana was the wind offshore industry. For example, we have very aggressive targets here in the European Union. We want to increase the capacity here by fivefold. Or 5 times by 2030, from 12 to like 60 gigawatts, and then another 5 times to 300 gigawatts in 2050. So strong growth in that area. So there are a lot of companies in the value chain that will benefit from that development. We have the aquaculture industry, very important, very fast growing. I mean, a couple of decades, the aquaculture industry, like fish farms, were not existing, and today they are meeting the demand, or more than 50 demand, global seafood demand already. So it has been growing fast and is expected to continue to grow fast. So there are a lot of subsectors that are growing quite fastly. And that is also what the OECD estimated, that the blue economy is growing faster than the overall economy in the next couple of years, although this estimate was before the pandemic hit us. But nevertheless, I haven't seen that the fundamental growth drivers haven't changed really. So I'm quite optimistic.
Rana.
Yeah, and the other thing I would add, so I think that's great to hear, what Paul was able to share. But the other thing I would add, and I've seen this in a lot of the conversations we had about climate and sustainability, is that what we can benefit now is technology, right? So I think the advent of technology will really help in many sectors, sort of kind of leapfrogging and finding solutions. So I wouldn't downplay the opportunity to leverage technology to help us find solutions to address some of these problems, because we're seeing it in and obviously in climate, we're seeing it in healthcare, we're seeing it in agribusiness, where technology can help improve outcomes, improve reach, give us better data so we know what we're working with, and also find solutions.
Paul, I'm curious, do you have sort of different pitches for different kinds of investors? I mean, do you have one pitch that emphasizes the sustainability side of it and another pitch that emphasizes the returns? Or do you basically say the same thing to everyone?
No, I say the same thing for everyone. So over the long run, we want to really achieve an appealing return. And I think given the growth drivers and the tailwinds right now, this is definitely possible in the long run, although we have certain sector biases, and with that, a big deviation between the performance of the fund and the market in the short run, in the short term. But no, it really goes hand in hand. So we're trying to find business model that have a positive impact and growing and generate a positive return. One example would be the recycling industry that helps that plastic goes, for example, into the ocean. And this is an industry that is also emphasized by waste management companies. And they make a lot of money by recycling those kind of oil-based products because prices are high. So we see you can have a positive return and a positive impact. That is what we're trying to find, those kind of companies in the fund. And so we are selling it to, or return and sustainability hand in hand, so to speak.
And Benoit, are there any particular sectors that you think are perhaps underappreciated, or that you offer the most potential for both sustainability and good economic growth?
Well, yes. I mean, there is the sort of the traditional ocean sectors, and then perhaps some of the new ones as well. I think fisheries remain a very important sector, both wild captures and of course aquaculture. There is so much potential to make aquaculture more sustainable and avoid it destroying, say, coastal ecosystems like mangroves, right? Obviously, offshore energy is huge. I mean, it's developing really fast. Offshore wind is growing very fast everywhere. But tidal power as well should be considered. Paul alluded to basically cosmetics and pharmaceuticals, right? The algae industry, very promising. So much we still do not know, and we waste. So that's an important one as well. These are some example. Perhaps another one, which is perhaps a little smaller but very important in the context of climate change and the lack of fresh water, it is desalination. More and more countries have to invest in that. Singapore is actually a very good example where it's investing in desalination in addition to all the other ways of recycling water, protecting its watershed, etc. So it's a very useful and necessary complement.
Paul, I mentioned at the beginning that, in some ways there's more hesitation about the blue economy and blue finance than there was about green finance. But I suppose from an investor's point of view, perhaps there's an upside to that. I mean, does it help that in some ways these sectors are underappreciated at the moment?
Yeah, I think it's a good point in time to invest because of this, because it is not yet discovered really by sustainability investors. The reasons are what I've also already mentioned, is the lack of data in the industry, the lack of focus also for governments and regulations, the lack probably also of targets. There are some targets that we have when it comes to single plastic usage in the European Union and so on and so forth. But we need more those kinds of targets that really increases the visibility also for investors, and then they are more willing to invest in the space. But I think this is only a matter of time. And if this happens, then, and the interest increase, we will likely see that companies that provide solutions to protect the oceans will get a lot of investors' interest, and we probably see also valuation, multiple expansions for those kind of companies. And with that, it is a good or potential returns that we could see on this. So it's better to invest now than after everybody is aware of it, I guess.
Well, thank you. That's probably all we have time for, but I've enjoyed the discussion a lot. I mentioned in my opening remarks that a lot of the value of the ocean is unpriced. It seems like, unfortunately, a lot of it is also unmeasured, but that does mean that organizations like the World Bank, like the IFC, like the WWF, have a big role to play in collecting some of the data we need to nudge companies to do better, and that data could then help to attract more investment and allow funds like Paul's to drum up more investment and see where the best opportunities lie. And as Paul mentioned, the fact that it's currently an underappreciated sector means that there might be sort of richer upside potential for early investors. So will blue be the new green? It's not clear. It's still a very small share of the overall green finance, but we might see some of the enthusiasm that has risen recently in green finance transfer to blue. I have a 4-year-old daughter who's very keen at the moment in mixing paints. So I know that if you mix blue with green, you get cyan. So maybe we'll have a growth in cyan investments in the years ahead. Thank you to all of you for joining us. Thank you to our speakers, and do stay tuned for our next session, which is also looking at finance. It's looking at the business case to attract early investors. So a natural continuation of what we've just been talking about. Thank you to all of you.